I was literally starting zero at 35. My dad was scandalized. Like, dude, what are you doing? So you should not be anxious every year looking at your savings and thinking, what am I doing? I mean, to be real, right? So 34, 35, I came back to India. I had a loan from US. Startups call you for a coffee for an interview. They never tell you it's an interview. So I went in assuming it's a coffee where I'm getting to know the firm. I walked out with an offer. I still hold 70% of my shares at Zomato. I have not sold.
Yeah.
And I don't plan to sell them anytime soon.
This is a textbook wealth creation story via ESOPs.
Just salary is not going to create wealth.
Hi, I'm Sandeep Jethwani, the co-founder of Deserve and the host of the Create Wealth podcast. In this episode, I talked to Mukund Kulashekaran, who is the Chief Business Officer India at Urban Company and was previously Chief Business Officer at Zomato. We talked to him about his journey of wealth creation through ESOPs. What are his learnings? What are some of the mistakes he's made? We talk about how he scaled consumer businesses in India and his story of transitioning from US to India, from consulting to operations, and from Zomato to Urban Company. I hope you'll enjoy this one. Mukund, in your life, there have been three fascinating transitions, if you will, right? You moved from US to India.
Yep.
You switched from consulting to being an operator. And then recently, or some time ago, you moved from Zomato to UC. I want to explore and dig into all of these three, starting with the US to India thing, right? And today India is hot, it's on everybody's radar, but probably when the time you did it, it wasn't so, right? What was the thought process at that point in time?
Yeah, I mean, one connecting dot you will realize when I speak about all the threes, they were not well rational reasons. A lot of it was, I would say, intuition and personal, I would say, to a certain extent. India was mostly because two things. One, it was clear for both Shiva and me that we wanted to raise our kids here for obvious reasons, right? So I think one was just that. So we in fact moved, especially when we knew we were expecting.
Sure.
That was the trigger. The second one, which I think in hindsight became more clear for me, is the type of work I was doing in US was all cost. And I think it was clear that the growth was very moderate at best. And I whenever I speak to friends in India at that point in time, I realized a lot was happening. So that excitement was much more clear here than in US.
And is that like one of the things to think about? Like which part of the company's P&L do you sit at?
No, exactly right. I was at BCG.
Yeah.
I used to do consulting. Like 4 of my work in the US was how do you restructure cost. It was clear what was happening, right? Like people were either consolidating, buying. So it was clear that it was maturing, and there were parts of the economy, of course, which was getting better, but it was clear that the majority was sitting there. And there were a couple of projects, thankfully, in India, I got involved. All of this was very, very growth investment. So one was like somebody in the US trying to invest in India. So of course, there was like people who were pulled in because we had both sides understanding. That's when I got the flavor that there was a lot of action by that time. So I would still say I was not that early because by 2014, and I think Flipkart was already in a reasonable place. There was enough excitement. So I think it was early period where excitement was just starting, and I could start to feel it because I did a few due diligence, and then that's when I realized, okay, action is here. We did a due diligence. We'll compare it with China.
Okay.
And then I realized, oh my God, if this plays out even halfway, this is going to be berserk.
Clearly, it was a good bet, but so therefore this was intense, it was challenging, it was fun, like you said, and yet then you decide to move to the operating side and quit what would be considered a great job to have in India. So what caused the shift from BCG to Zomato?
I think it was just the excitement, right? I think when you sit on this side of the table and do due diligence, you suddenly realize how exciting the other side is.
Yeah.
And I also kind of realized that it's a no regret move. Worst case, 2 years, doesn't go anywhere, I can come back to consulting if required. So I also realized it was really no risk in and I think the good part was one of my good friends who had done it a few years back, and I had a chat with him saying, because I thought it was a lot of risk and all of it. He was like, yeah, at best you're going to be 2 years behind your batch.
Right.
Does it really matter? I was like, doesn't matter. Then he was like, you should do it. Worst case, what will happen? You don't like it, we'll switch back. But then I think it just worked out, and I think I never looked back from that point on. The interesting part is startups call you for a coffee for an interview. They never tell you it's an interview. So I went in assuming it's a coffee where I'm getting to know the firm. I walked out with an offer. So it was not a well thought through decision where I spent weeks thinking about it.
But didn't you evaluate other options aside from Zomato? That was like the n is equal to 1 and you chose out of that?
Unfortunately, yes. I think as you will get to know me as we go through the conversation, you will realize. See, in hindsight, I had already done a little bit of due diligence.
Okay.
So while on BCG, I looked at enough firms because there were a couple of projects where we had to invest money. So I knew that I don't want to go too early because was not, I mean, I had twins and I knew I'd need some salary. So I can't do like a Series A. So in my mind, it was already clear that it had to be like a Series B plus company, which had some revenue and some runway. So at that time, there were like 4 or 5 real options.
Okay.
And I think I just hit it off at that point in time.
Right.
The people I met were interesting. A couple of my old friends were working there. It kind of seemed like this seems right and I don't need to think more. And they were also smart by giving me an offer immediately and make me feel special. I think it just flipped very fast.
And what did you think that in that journey that you were evaluating for in the course of the discussion, the coffee that was happening? I suspect you realized after a few discussions that this was a proper formal conversation actually going on. But what was the evaluation process that out of the, say, 5 that you would have had, how were you checking the boxes?
I would say just 2 things, right? This also, I think one of my bosses early on taught me. You want to look at market risk and execution risk.
Okay.
Market risk was not really there. I think it was clear that food is a very large market. In fact, right before that, we had done a similar work and I knew if you look at comparable markets, it was remarkably large compared to where India was at that point of time because food delivery was just getting started.
And by which time in the Western markets, food delivery was a thing?
West actually was not a big market. China was very big. Meituan and Elema were already very big by that time. Okay. I would say UK and US had a few comparables, but they had not still done full stack delivery. So it was, in fact, US, I would say, was a lag in the market. I would say Postmates and DoorDash was a much later thing than what happened in India and China. So right comparable was actually China. So I knew market risk, maybe timing could go off, but it was clear that there is something going to be big coming out of here. Then the second question was more around execution, which is the team driven and passionate? And are there smart people around? And I think after the discussion, that was very clear. And a couple of my friends were also there. So I knew the team was fairly good. So I knew if a team were to crack it, they had a fairly good odds of doing it.
So outside of the fact that market risk you had probably already evaluated before going into the conversation, execution risk you were probably trying to figure out during the conversation. But these were broadly the 2 things that you were checking in. Any things on like how the folks are, the people that you'll work with?
So I think for me that comes inside execution. Honestly speaking, I've realized the more simple the mental model is, it works easier. Because the more complicated the decision becomes, it's then difficult. You can rationalize it to yourself that it was the right decision. I also feel culture is very fundamental to context. So if it's a highly competitive market, you have to be aggressive. You have to be a hustle company. If it's like a very complex business like what we are at UC, you have to be more methodical and thoughtful. I do think so. Culture is a lot of context which drives into it. And I knew food is going to be highly competitive. It was very clear by then, like there were like 6 guys fighting it out. Their culture was very aggressive and very on the face.
Interesting.
So I knew that this is what it would take. And to some extent, I'm also high adrenaline. So I knew I would fit in because I actually like it being competitive. I've always been a sportsman all my life. So I prefer it being competitive than non.
And then there was a point where Zomato had scaled and you decided to switch to UC, which by this time was also a reasonably scaled company. Or maybe
UC was not. So
I
think second time I said, let me take a little bit more risk.
Okay.
So say for Zomato, I think was a much better scale because unlike their delivery business being new, their advertising business was actually quite established.
Got it.
They were, I would say, by far the most high traffic site in India and many parts of the world when you think about food. So they were fairly established in that perspective. Yes, they pivoted over the period, but I think as a business, both from a valuation and all of it was at a much different scale. UC, I would say, both from revenue, number of users, valuations was a very different scale in that perspective. So yes, second time around, I realized I should take more risk because I think I know some bit. Now I should be a bit more risk taking. But I did want to be of a certain scale because I realized I'm a slightly seasoned leader.
Yeah.
I will only be able to add value at a certain scale. 0 to 1, I may not be able to add a lot of value. Then I may be better off just starting myself.
Sure.
So the difference between starting and joining might be the same. So I was like, let me keep it at, in fact, I had a number in my mind. I said 100 to 200 million is where I wanted to be. And then I was like, okay,
what is 100 to 200 million? What
that valuation
of
that
the
point,
company? Or
yes, I
at the
said
time?
as a proxy. That
Sure.
usually
Yeah,
means Series
yeah,
B,
of course.
something of that nature. Zomato, I would say, was much closer to $1 billion by the time I joined.
Got it.
So here I was like, okay, let me come below a couple of steps. Let's start somewhere there. That means PMF is kind of established. They have something going. I understand how to make scale happen. So maybe it's a good match of like what is needed and what I can bring on the table.
Now that you came into UC, again, it would have been a little bit of a difference between what you were experiencing at Zomato, which by this time was a scaled company, and UC, which was still relatively early in its growth phase, right? What were the fundamental adjustments that you had to make in that journey?
So I think two things, right? One is just mindset. I would say one of the reasons I didn't scale as a great leader, and see, when businesses grow fast, it puts immense pressure on you to grow with the business. I think sometimes we underestimate that need. I would say one of the things I didn't get right at Zomato was just how well am I adapting to the business? And somewhere you are kind of becoming the bottleneck, and then the pressure starts to build on.
Explain that, Mukund.
So, for instance, the business is growing rapidly.
Yeah.
So you as a leader, your job changes dramatically. Say maybe first year when it's scaling from say 0 to 1, you have to be hands-on. You have to really understand the business, know the math of it, and then you have to make things happen. Once it's gotten to a certain scale, say 1 million deliveries a month, the next stage actually needs you to build a team. Now make a playbook and make this thing happen.
Yeah.
And then once it gets to like a 5-6 million, then India's TAM becomes a real problem. Then you need to really think, what do I need to unlock now to really supercharge this business? So as a leader now, you have to keep changing your job profiles as you move through the journey.
Sure.
And I think I almost lagged there because in hindsight, because possibly I was doing it for the first time or whatever it is, right? So I always felt I was 2 steps behind on what is needed to be done as by my job. And hence that shows up as burnout or like misunderstanding and all of it. At the root of it is basically you not deeply understanding what your job is.
Yeah.
And you're not doing your job well.
No, it's an interesting one because, a lot of leaders, and I would say even I've gone through that journey where the business is doing really well, but you feel like, or I felt like I'm coming up short.
Yeah.
And now in hindsight, it seems like I was not thinking hard enough about what my role had changed to become now, right? And I guess that's pretty much...
Exactly. So my takeaway after Zomato was, I need to be a bit more proactive about this. And I'm also a little bit of an emotional guy. So that makes it problematic, right? If you're emotional and if you're not proactively thinking about it, then it puts you into a little bit of an aggressive mindset of like the ego starts to play in, right? Who's right? Which I think is the bad place to be in. What you actually need when you're building something at a crazy pace is a lot more openness to be looking at the business and coming to an answer. While it has to be conviction driven, it has to be, the good part of ego has to play, which is your conviction. But you should be very open to looking at where you're going wrong and how to course correct.
Interesting.
I would still say I'm halfway there. And people will laugh when they'll
a lot of people rely on you for advice.
Yes. So I still think biggest change for me was, when I came into UC, was to get this right in my head, saying I need to be very conscious what is my job at hand and be dispassionate about it. So that consciously I keep flipping. So 2 things I did was, thankfully I have a couple of mentors who now I meet almost every quarter. Same people for a long period of time. And they also, I respect them deeply. So I think now there are a couple of people who keep course correcting me, saying, "Yaar, is this the right thing to be doing? Why are you doing this?" So, but that is important to be done in a non-judgmental and an objective fashion. I've realized at work it becomes challenging because everybody has too much context. So I think in a slightly outside context, I've actually realized it's way more easier for me to do it, at least in my case.
I want to go back to the Zomato journey. And when you joined Zomato, primarily the business was of listings of restaurants, right? It was sort of Yelp of sorts for India. And by the time you exited, it was the largest food delivery player in India, right? And you shaped that outcome. Going in, how was that job defined? Like when you signed up for Zomato, was it clear that you will do this food delivery business, or was it like ambiguous?
No, I don't think anybody joining a startup should expect to have any job description. And I'm sure that's the intention of your question. So of course not. I didn't even know I'll join the food delivery business, to be in all honesty. They said we are hiring a bunch of folks to help us do various initiatives in the company. So come over. I was also like, that makes sense, honestly. If somebody gave me a clear JD, I would have actually been a little bit worried because you're joining an early stage so that I don't have a JD, right? I mean, that's the reason I'm running away from structured work. So I was fine with that. It so happened that business of delivery needed a lot of ops experience. I had spent a lot of time at ITC. In fact, building factories, running factories. So operations was very natural to me. I enjoyed doing it.
Got it.
So it was just, and I think the first job to be done was we needed to digitize these menus and put one of these small phones at the restaurant so that they can take orders. Very ops problem. It was just like collect menu, digitize karo, phone laga do. But it has to be run like a factory because you're trying to do 10,000 like period of like a few weeks, right? So it needed someone with, so my muscle was perfect. So that was the first thing they started me on. Yeah, can you just solve this problem? 3-4 weeks, I think we got it up and running. The good part is in a startup, I think good that you don't have roles. Then I think they were like, okay, isko aap aata hai. Chalo, let's give more. Then I started running sales. Within no time, I think maybe 5-6 months, I started running the India business. So that's how it fairly organically happened.
And sales was getting restaurants onto the platform.
Exactly. So I would say first was digitization, then getting restaurants on board, and then like getting all of these things together, including product and how do you actually make the consumer side work.
Sure.
So I think within like 6-7 months, I started to run the full business. But of course, that time the business was also small, in all honesty. But at least it was fun. I don't think I realized the organic transition happening. It was almost like ye bhi karna hai, and soon one fine day you realized, okay,
this is your
my
journey.
neck is on the line now.
Got it.
So I don't think it was that formal.
Sure.
That's the great part about Zomato and DP. So it was not too formal. It was, I think, just organically happened.
Sure.
I also think for the first time after a long time, I was having amazing fun. It was like, I don't think I slept a lot. I don't think I had weekends. Thanks to Shiba, I think she let me do whatever I wanted to do. I was having amazing fun. So I don't think I even realized what was happening. It was just day in and day out, such a hustle, that 0 to 1 part, that I truly enjoyed it. The adrenaline and the fit, I think, was natural. So the first year just breezed through.
And then how did food delivery happen? And which point did you
No,
start?
so I'm saying that the digitization was actually for the food delivery. So from week 1, I was on food delivery. Just that I started with very small part of food delivery. And then organically, I started to run the full food delivery business. It was just very organic. It was not thought through or...
But, Mukund, coming from ITC, which is operations of a different kind, here you're sort of scaling very rapidly, right? And there are like debates, especially in the context of market cycles, ki blitzscaling should be done, not done. Is India right for a blitzscaling sort of a framework or not? Do you have a mental model around that which businesses, how much do you spend on investing into growth versus like doing it steadily over a period of time?
See, I feel this is a tough one. And I also feel there's a lot of hindsight and survivor bias in that answer. So we have to be very careful. Because if this was easy, then PMF would be easier.
Yeah.
So I think that's the caveat, biggest caveat I would say. Normally, I've seen if there is a little bit of land grab going, you have to blitzscale. You have no choice.
So if it's a competitive environment where
Exactly.
a bunch of players and the fact that this is a winner can take significant share.
More than winners take all, meaning if there is a density aspect to the business or a scale aspect which aids both consumer side and supply side, because better scale gives you maybe lower cost and better scale gives you better assortment.
Yeah.
In Zomato's case, both is true.
Yeah.
Better scale gives you better assortment by bringing more restaurants, and better scale gives you higher density and lower cost. There is a land grab going when there are 4-5 people fighting.
Yeah.
I don't think in those contexts you actually have a choice. So that's why I would say in many cases, this is a theoretical question. Because the minute something seems interesting, 20 people will jump. Once so many people jump, you really don't have a choice to now think कि मैं blitzscale करूँ या ना करूँ. If the assumption is that there is a high advantage by having scale, which I think most consumer businesses at least have, you may have to go down that path whether you like it or not. So unfortunately, then you have to live with the burn to a certain extent, hoping that once you get to scale, you'll recoup all of this.
I think it's interesting because, when you're talking about it, it seems like there is a clear contrast between that and let's say what we do in fintech or wealth tech or lending tech, right? if you blitzscale and you grow your lending book very fast, you have
then
serious
you're toast.
issues.
Exactly.
Then
because their scale doesn't give you advantage.
Correct.
That because the cost of borrowing still is going to remain the same. Your NPA determines your PNL quite a bit. So I would say that's why. And I only understand marketplace businesses. So I don't want to also assume I know everything. At least in consumer marketplace businesses. By definition, marketplaces need scale for both sides of the marketplace to find value. And scale hence has to be a very important factor. And if you can reach the scale faster, you will anyway make way more money after that to compensate for all the loss.
Correct.
So even if you do the math, which I don't think any of us did, to be in all honesty, but in hindsight, if you have to do the math also, I would still say blitzscaling might beat any day slow scale because the money you will throw from scale would be so much more than taking more time to get there.
Yeah. And I think in this context, Mukund, I don't think a lot of us in India understand this blitzscaling concept, because how does it get translated into a PNL of a company is that 100 rupees was spent to get 1 rupee of revenue, right? And all of that criticism comes out, whereas actually what the founder and the team are trying to do potentially is sort of scale their way into future revenues, right?
Yeah. No, that's where I think CAC to LTV is, the cliched way of CAC and LTV, I think makes the maximum sense, right? Because there is a cost of acquisition for both customer side and the partner side. So if you put that as one cost, and there is a lifetime value, and lifetime value is 3 years. Let's not take beyond 3 in India. You don't know what's going to happen.
Yeah.
If that math is very solid, then you should do it as much as you can. And in food, it was very, very clear that match was super solid because it was a habit building category. The minute people started liking to order, their frequencies naturally increased over a period of time.
And you had evidence of this by the time you were scaling?
Yeah, we were already having evidence, and it was very clear that the LTVs were remarkably better compared to the CAC.
Got it.
And we also knew the CAC will only come down because as your network gets larger, the cost of acquisition becomes only easier. Imagine every new restaurant will be easier than the old restaurant because you're able to give you're actually giving them dhanda.
Right.
This is not selling advertisement. So you're actually giving them dhanda. So if the new guy will be easier than the old guy. And even on the consumer side, once your word of mouth starts to kick in and people start to see that, okay, this is actually making my life better, it only makes it better. So the CAC for a period actually starts to drop before it climbs up again.
Yeah.
And I don't think even without the math, I would still say it is reasonably strong.
No, it makes sense. And I think this is a great framework for somebody thinking about how some consumer businesses are spending ahead of schedule.
Yeah.
And why they are not profitable.
I mean, to be honest, even very old school businesses, we rename it as CapEx and cool stuff, right? I mean, if Tata is building a factory for making cars, of course there's a huge upfront spend as CapEx.
Yeah.
It's just that in the P&L, it's called CapEx and taken out to the balance sheet and you put that as depreciation.
Yeah.
Here, we don't do CapEx depreciation because our CapEx is all like marketing dollars and subsidies. So it's...
And even like giving free stuff to people, right? I remember back in the day when Nestle used to give Maggi packets in school, right? We used to have these school events when Nestle guys would come and serve us Maggi at lunch, right?
I mean, that's how we build a new behavior, right? See, the truth is only 1 in 5 will work. So the world will always see, I told you so. But the game we are playing is the odds, right? I mean, if 1 in 5 still works, you've created so much value for the ecosystem. So world will always keep saying, I told you so. And I'm sure for the next 20 years, we'll keep having these nice articles which say you spent 1 rupee to make like 60 cents. I think that's good content. But I think the truth is you're playing a probabilistic game. Everybody knows that. And if the odds work in your favor, I think it is great.
Absolutely. Mukund, I'm going to switch to something much more personal now.
Sure.
Which is your personal wealth creation journey, right? Now, when you switched from BCG to Zomato, probably what was not super clear, or maybe it was, that ESOPs or share of equity in the company is a large part of compensation, right? How did you think about that? Was there a negotiation around that? Was that sort of renegotiated at every period intervals? Talk us a little bit about that.
So firstly, I think understanding ESOPs took me some time, in all honesty, right? But I fundamentally realized just salary is not going to create wealth. I think it's very clear in my head, because if you do the math as a consultant, you work a very long time to create good wealth, because you're at the end of the day, you're charging client a charge for your hour.
Sure.
Beyond a point, it's capped.
So in a way, you're renting your time and time is limited.
Exactly, right? Because I have to keep stretching my time, which I think beyond a point doesn't make sense. So it was clear that you have to own some part of a business to really create wealth. And of course, that then has a higher risk. Of course, right? This risk reward is very clear in everybody. So to start with, first I knew I can take the risk because my OPEX is low. So like karna hai to fir let's go for the home run. Any which way doesn't matter. So let's do the home run and see what happens. I think was the thought. So hence I knew ownership is important. I of course didn't know how ESOPs, investing and all of this work. I think that I learned over a period of time and realized, oh my God, this is a little bit complicated. And I actually need
and
to
how
learn.
Important that is.
Yes. I didn't know vesting kya hota hai, holding period kya hota hai, and like strike price. There's so much nuance to it. I think I only learned that maybe 2-3 years in, to be candid, not upfront. And I think most founders are also employee first because they realize if you don't do this right any which way, people will not stick with you. So to that extent, I don't think understanding it makes a ton of difference, but I think you'll go with your eyes wide open.
Sure.
So I think that's good to know. So to answer your question, yes, I did negotiate. I in fact negotiated such that my cash was lower and my equity was higher. So I think they were also happy because you can't keep both and say, because I've had a few people even negotiate with me saying, I want you to match my cash and give me equity. I'm like that doesn't make economic sense for any one of us. Like you have to take some trade-off.
Sure.
So I was, I think, fairly willing to do that. I dropped my cash, not just my bonus. I removed my bonus out of consulting and I dropped my base pay further. And I converted all of that into equity in some form or the other. So that I get a much higher X. So starting, that was the simple math. 1 year, 1.5 years in, once they knew how good I was, then of course the conversation was very different. Saying, you can see the value I'm bringing to the table. What do you think is the right way to think about equity?
And was it like proactive from your side or sort of like a appraisal linked conversation that was happening as it went?
I would say it was mixed, at least at that point in time, because I think the good part is we all work closely, so people can see what value you're bringing to the table. So folks were also kind of already nudging me towards that. And then I was also like, should we talk about it? I don't think I was so mature. So I do think now I've gotten a little bit mature on how to have that conversation. I think it was a little bit more, I think I find it very uncomfortable to talk about compensation, to be honest. So it was like this awkward conversation saying, should we look at equity again? But then I think as soon as I started the conversation, it moved so fast. So I realized that there was trust on both sides.
The thing with ESOPs is that how do you figure out what's the right number, right? Because when it comes to cash comp, there are benchmarks that you can put at it, and in your mind, you can rationalize it. But when it comes to ESOPs, there are no real benchmarks, right? Your company is worth something else, some other company is worth something else, so you can't compare that. Even within your company, you can't compare with each other. One is private, two, roles are different, right? So how was that thought process going on? Like this is the right amount I should ask for?
I think thankfully, I didn't ask for an amount. I first said, should we reconsider this? And then, in fact, the conversation was, okay, how should we do it? Because I assumed it's not only my problem, right? Like there were a bunch of us who were all building together. So I think, hence it became like a little bit of a math exercise saying, okay, how do we determine this number? And then we realized, okay, let's say we all want to create at least this kind of wealth for all the core folks. And if that's the kind of wealth we need, what's the kind of equity we need to make that real, with an assumption that a lot of it will come from compounding. Because one has to also realize that it cannot come from grant size of beginning. I think this took me a while to understand.
No, explain this. This is very interesting.
So let's take Zomato's case as well, right? From the time my ESOP was given to today, we are at a 12-14x appreciation.
Okay.
So you have to believe there will be appreciation. You can't believe there will be a 4x appreciation and negotiate equity. But then you're pretty much asking for a huge chunk. And also you're assuming I want to make overnight a lot of money. If a company grows, I think at 25% for 10 years, it's 10x. And if it grows 25% for 15 years, I think it's 30x. Mota moti. Like that's the number I hold in my head. So just to keep, because compounding is difficult to remember. So I remember some 2-3 numbers so that I don't.
So 25% is your money is doubling every 3 years.
Exactly.
Give or take. So in a 10
rule
year
of
period, 2 to
72.
the power 3, and therefore.
Exactly. I do the rule of 72, right? So it's just easy to kind of keep the broad math right. So I knew I should at least take a 10-year view of this. And I knew whatever I will get, I can get maybe a 10x appreciation. Because I could see a CAGR of 25-30 at Zomato. It's not going to be slower than that. So I was like, okay, I should take a 10x of this, and would I be comfortable at a 10x of this? That number seemed good. And it was very generous, to be very honest. I was like, okay, this actually makes me feel uncomfortable that I am valued this much. So I think in hindsight, the most important thing which clicked in my head is do not take a 3-4 year view of this. And in reality also, that's what has happened. I mean, I still hold 70% of my shares at Zomato. I have not sold. And it's been, I think, more than 7-8 years since they were issued. And I don't plan to sell them anytime soon.
That's amazing conviction. As a wealth
Yeah, yeah.
manager, we would want you to diversify, but
Yes, that's what my wealth manager keeps telling me. But I'm like, yeah, I'm already paying for the barbell effect here. I'm not covering my...
Sure.
Yes, my wealth manager keeps telling me, saying, you are 60% portfolio, 70% is here. What are you doing? I'm like, trust me on this one.
No, but I think the interesting insight for me there is that if you have, let's say, ESOPs worth 10 lakh rupees, a lot of times people value it not even 3-4x, but all the 10 lakh rupee value. You say, like, I'm getting ESOPs only worth 10 lakh rupees, but you've got to believe that it's in a certain span of time will be 10x of that. And therefore, this is actually potentially worth 1 crore that you're getting today, right?
Because that is see, if you don't believe that, the ESOPs are anyway not going to be worth. See, no company is going to get IPO'd at a flat growth rate and like very low valuation. Then you're toast. That's a case where its money is gone. So that case is as good as assuming ESOP is zero. Because you're only playing for upside in ESOP. There's no point, there is no average case in ESOP. Either you become big or you become irrelevant. There is no middle class in most companies at least, right? There are only two ends of the barbell. You're better off playing for the two ends of the barbell and saying, in the case where it plays out well, will I end up on the good side? And if that happens, great. If not...
No, I completely believe that. So basically, you start with a place of conviction and then have that discussion. Because if you don't start with a place of conviction, then that discussion is moot in many ways.
Because then you're almost... Then as an employee, you're saying that I don't believe this company will go anywhere. Which is then, in my mind, a bigger problem, right? Because then there is no point having skin in the game. If you yourself don't have conviction, then I would say go find please something else you have conviction in. Because that boundary condition, I think, is important to agree on. This will grow. Yes, we can debate whether it will grow 10x or 15x. That's okay. That we can take the bear case and go with it. But if you believe it will grow 4x over the next 7-8 years, then you're basically saying we are toast.
So the interesting part of ESOPs is that, there is a vesting schedule. Once vested, there's a period during which you got to exercise those ESOPs, right? And when you exercise those ESOPs in a growing company, you end up paying a significant amount of tax.
Yes.
So for a lot of folks, it's confusing whether I should exercise and convert it into stock or continue to hold it as ESOPs. Did you have that thought process or discussion at any point, and did you exercise them, or was it post-IPO?
See, the truth is, firstly, I didn't have an option to exercise before IPO. For most companies, that's difficult, right? Because getting a loan on an unsecuritized
unlisted asset is difficult.
It's difficult. Yeah. Right? It carries a very high risk. So I think that option is pretty much off the table for most people. So I would say it's post-IPO, where it happens. Unless it's an immediate secondary, where anyways, there's no loan, right? You're just selling. There's no then holding.
The ESOP gets cashed out, so there is no...
Exactly. There's no risk. So that secondary situation, I'm not even taking. So I'm taking the scenario where you have to vest and hold. Vesting and holding without an IPO, I would recommend to very few people. That's a crazy amount of risk you're taking, because you're taking a loan of anywhere up to 35-40% depending on which tax bracket you're in, and then you're holding it perpetually for a period of time in an illiquid asset. I don't think even I have that risk appetite. So I will never do it, in all honesty. So I have done it only post-IPO. Even there, what I have normally seen is any which way I have to pay that 40%, whether it's now or 4 years later. So I have not done the math really to know does the timing really matter. It's my risk appetite at every point of time, how much loan I want to take. Because there is a small window where it vests and then you sell, because there's like a 10-day break. So you need to manage cash flows a little smartly. So I am usually like, okay, I am comfortable managing this cash flow. And so I've been doing it in kind of tranches to get myself comfortable.
Sure. And what about during the process of pre-listing, the company has a bunch of secondaries. Sometimes these secondary opportunities are offered to employees where they get an option to sell some of the ESOPs. How do you think about that? At which point why did you do it? Why did you not do it? Or rest of the gang around you? How was everybody thinking about it?
So I think I've seen all the extremes of fully people cashing out during secondary to not selling at all. because Vamsi and a few friends have kept forcing me, saying you need to start taking money off the table. Otherwise, like basically to your point, right? Like you're just leveraging risk like crazy. I think every time somebody had to nudge me to say, please take something off the table. Because I've asked every time when this happens, saying, yeah, I don't feel I should sell. There's so much upside left. But every time people have said, no, take a small chunk. It's a water cooler moment also, right? It gives you comfort. And in hindsight, I've also seen value to it. Just having a little bit more money in the bank has gotten me a little bit more comfortable. But I have taken the minimum viable always. I'm not suggesting this for everybody. I mean, my lifestyle and the choices I'm making, I think are like, I'm comfortable with the choice. So I have done slightly small chunks to just have a water cooler moment and have some money in the bank. But as I told you, I still hold most of my. So I have vested Zomato stock and I've sold some to pay for the taxes. Outside of paying for the tax, I'm holding most of it.
So, and Mukund, given that now you knew so much about it at the time when you were joining UC, which was an earlier stage company when you joined it, how did this experience inform the UC equity discussion?
So I think the good part is when you transition as a startup leader, I think the credibility is remarkably different. I think in hindsight, I realized, right? I think just that 3 years suddenly put me in a different trajectory, which I honestly don't think truly was deserved.
We'll debate that offline.
Because I don't think 3 years changes you so much, right? But I do think specific knowledge is hugely valuable. And I think in this case, specific knowledge was massive because very similar problems, similar issues. So I think they could see that, okay, this guy can bring a little bit of more value than an average person who would have just maybe had consulting experience. So I think I had a fairly high premium coming in because of that. So, and I think UC founders have been fairly fair with most people. So I don't think, in this case, I didn't even negotiate. That's the best part. The number they put on the table, I would say was so generous. I was like, this is good. Let's move forward. But I think that comes from, I think people underappreciate the value of credibility and reputation. If you've really done good work, it shows. I don't think you need to do more than that. I tell this to all my team. Stop worrying about networking and writing posts. Yes, if you enjoyed it, do it. But don't do it for the sake of doing it. Because what matters is the reference call. Who gives the reference? First of all, here there was Vamsi. I'm sure he helped both sides, right? Like how he helped me understand the value of the company. I'm sure he helped the other side understand, I have seen him in close quarters. This guy is going to be valuable. So and that is not because Vamsi and me are friends. He's seen me in work context. I have seen him in work context. We both have respect for each other based on our capabilities.
Got it.
So I do think, especially this world is very small. Like all the startup space are generally also, right? It's the same 50 people moving around.
The word goes around.
So if you do your job really well and are exceptionally good at it, I don't think you need to do anything else. I do not do as a principal events. I don't join events. I don't like get to know people. One, I'm an extreme introvert. I hate doing it.
No wonder it was hard to get you for this.
No, I don't think it was it. I am an introvert. I don't enjoy doing it. I'm not good at it. And I don't enjoy, neither am I good at it. So I'm like, why am I forcing to do this? I enjoy solving problems. I enjoy going and sitting down with the teams and figuring out how to kind of crack a tough problem. I want to put my time only to that.
But I think there's something in it for founders also to take away from this, right? That when you're having a discussion and you are convinced, then you lay out an offer which actually makes sense for both sides, right? Otherwise, everyone is wasting time.
Haggling, I also feel from a relationship perspective, right? I feel haggling just sets the relationship in a bad tone. Both sides, if they feel they've left something on the table, I always feel that's a better outcome. So I think, for instance, I did not worry about my cash when I came to UC. It was a markedly step down from where I was at Zomato on cash. But then I realized the stage of their company, it'll be too expensive for them. So I didn't even have a discount. I was like, cool. I get where you're coming from. Because they were so generous on equity. So I think both sides need to see eye to eye and realize this is the right call. Because the equity could have gone either way. Sitting here today, I can BS my way that I could see the truth. No way. Like that risk was fairly high at that time. It could have gone anyways. I was willing to take the risk and I think they were willing to take a risk on me and it worked both ways. So both sides have to be very comfortable, I would say, to leave a lot on the table. The minute you get into the haggle mindset, I've seen both sides, it doesn't work.
Mukund, seems like this is a textbook wealth creation story via ESOPs. What are some of the mistakes that you feel like okay, going back, you should have revisited and done differently when it comes to ESOPs?
So I would say two things. One, I do think I sold more than I would have liked in hindsight. I did sell, say, for instance, in pre-IPO of Zomato, I did sell 20%. In hindsight, I was not keen to do it, but then I was like in FOMO mode and I was like, karna padega. I'm sure it helped. But if I think about it, see, if you're anyway like me, meaning you've kept your OPEX low and wealth is truly wealth. It's not to solve your lifestyle in the short run. Then you let it compound. Do not break compounding, because I learned the value of compounding, because from that choice to now I am 7x on the 20%. So I should have not let that happen in hindsight. I corrected for it by buying a lot more at 42, which I think made up for some of it. But still, I think in hindsight, I would say do not break compounding. I think very rarely do ride a wave. So when you ride a wave, please ride it fully. And that's what I keep telling myself, because it's so anxious to continue the ride because you feel yaar khatam ho jayega. But very rarely I think great companies are made and ride is happening. So you should play it out.
You know, the interesting, and this is true, because if 100 goes to 500 and I sell, I've made $400. But from 500, it can go to 1500 and I make another $1,000.
And that's
So,
massive.
Exactly. In terms of multiples, it might be lesser, but in actual value terms,
Oh, it is remarkable. Exactly. You should not worry about excess here, right? It's about real money you take off the table. Is it 2 CR versus 4 CR? It's a humongous difference.
Correct.
And the next 2 CR was actually way low risk than the first 2 CR. So if you've made it till the first 2 CR, let it compound for some time.
Yeah. So first mistake you said is selling too soon.
Yeah. At some level sell, but I think be cautious. Like, don't be too risky.
Know that you might have a regret moment a few years down the line.
Agreed. So I think one is that. And second is, I think it took me a while to understand that this plays out a long run. So you should not be anxious every year looking at your savings and thinking, what am I doing? I mean, to be real, right? So 34, 35, I came back to India. I had a loan from US because of the crazy price of an MBA. We should talk about it offline later. Yeah. But I did that also. So I was literally starting zero at 35. Yeah. So 35 to 40, nothing happened in my life because, I mean, how much can you save from cash, right? Yeah. So you're like, dude, what am I doing in life? Like, I have 2 kids and like you were
no
thinking,
safety net.
No safety net and like, kar kya rahe ho life mein? So it was very anxious, to be in all honesty, right? And then suddenly the IPO happened and my life changed. So I do think there is a long period of time which has crazy anxiety.
Yeah.
I don't know how to tell people don't be anxious because that is unfair. But I would love to handle that a little better because I put myself under a lot of pressure in that period. Ki yaar, which way is this going to go?
No, it is true, and it does happen. And like even my previous journey, when we sort of started a company and we scaled it, during that I could see other friends who were in consulting and etc., investment banking, making way more money. Exactly. And I was like, oh my god, like.
No, and it's true, and it's not about lifestyle or other things, right? Then you really start worrying. Okay, I have kids. What do I do? So I think those struggles are real. So I don't want to make it sound like it is some hypothetical situation. It is a real situation. So, but the truth is, we are playing a high risk game. So if you're playing that game, then it unfortunately takes time. Yeah. So one is knowing that fact, but the other is being okay with it. Yeah. I think it took me a while to get okay with it. And to that extent, I think some selling helped. Because I think that was the first time I got okay with it. Because I was like, okay, now there is something. So now let's get okay with it.
And you know, to that extent, the first part doesn't seem like such a big mistake. Because if it makes you comfortable and you can ride the bigger journey, then
that's why I said, I think hindsight is all 50-50, right? I would say, be cautious how much you dilute. It's the limited point. That's true for startups also, right? Yes. If you raise too much money early on, then you dilute way too much. Yeah. Is that money really required for growth? Is a good question you always ask in startup, right? Yeah, early stage mein dilute karenge to bahut chala jata hai ownership. Yeah. Very true for ESOP. If you dilute too early, then you will not get the upside. It's the same math. So can you be smart about dilution? I think that might be the only way to think about it. So if you really have conviction about the company, take some off. But be thoughtful. Like, do you really think selling to buy a house, is that the real call? I don't know. Like a lot of my friends did that. I'm not sure that's the right call from a wealth management perspective. Again, buying a house is a very personal decision. If that makes you comfortable, please do it.
Especially in the Indian context, when families are expected,
True.
you do own a house, and if that gives everyone in the family some comfort, so be it.
But don't kid yourself it's wealth, because if your yield on that rent is 2%, 3%, don't kid yourself it's wealth you're solving for. I think as long as the objective is clear, I think then we are in a good place.
Mukund, this has been amazing. I loved how candid you were about the transitions you made, about scaling at Zomato, and about ESOPs. Thank you so much for doing this.
No, it was a pleasure. Thank you so much for having me.
Thank you.